roughly the top 5 custodians in the world have about sort of 322 trillion of the sort of traditional assets today. We see digital as a much smaller segment at the moment, but within the sort of next 8 years, we see it being around 23 trillion. For State Street, custody is what we do. We're very much a monoline sort of trust bank in that area. We see it as a huge growth opportunity for us. Got a partnership with Taurus, our custody platform. We've got a digital TA platform, Xylo, which we launched in the UK recently. So for us, we're fully in. I think we welcome some of the recent regulation in the US around stablecoin, and we feel that will really accelerate that growth and actually make that 23 trillion real. I think one of the things that we struggle with is the liability element. So it fundamentally changes the risk model of banks in terms of custodying assets, because a digital asset is very different to a traditional asset. And if it's lost, it's really lost, and that could be a huge amount of money. So we're thinking very carefully about how we do that and being very responsible about the way that we go into digital. It has to make sense for us from a revenue perspective. We have to be able to stand behind it and protect the end investor, because that's fundamental to what being a custodian is. But there's no doubt in our mind that this is the future, and it's got huge potential. And we're also increasingly becoming confident that we can work through some of those liability issues, and that we can, make some pretty big announcements in this space, and gain a decent amount of market share. There's huge interest from our client base at the moment to do this, and we're getting pushed pretty hard to be fully engaged in it.